Hello my friends, this is Doug Fabian. Welcome to the weekly ETF report. Today is Thursday, February 26th, 2015. As always, three things that we want to talk about today. Our goals are to help you be a better exchange-traded fund investor. Let me say that right up front. That's always my focus when I'm preparing this video. Now, I want to begin with a big issue. And the issue is interest rates in the United States. And there is a prevailing feeling amongst investors that interest rates are going to be going up. Now, Janet Yellen was in front of the Senate Banking Committee this past week talking about interest rates and how the Fed is planning on raising interest rates later this year, maybe in June, but most likely in September. Here's the thing. The Fed is in control of short-term interest rates. These are the interest rates that banks can borrow money. These are the interest rates that are based on CDs and money market funds. These rates have nothing to do with long-term interest rates. And now I want to show you a couple of charts. Here is a chart of the 10-year Treasury note yield. And you will notice this one-year chart shows that the yield continues to fall over the past 12 months. It did spike down in January, came up a little bit here in February, but it is still below its 50-day average and its 200-day average. That's the key point I want you to understand. And it is my opinion that long-term interest rates are going to remain stable as we go through the course of this year. The risk of significantly higher interest rates is actually quite low. And the fact that most people think that interest rates are going to go up in and of itself is more evidence that rates are not going to go up, because markets rarely do what everyone thinks they're going to do. The second chart I want to share with you is something I've talked about before, but this is a chart of 10-year notes for the US, for Germany, and for Japan. And you can see, especially relative to Germany and Japan, that, relative to the United States and Germany, that our interest rates are normally pretty close to one another. But over the last year or so, German interest rates have fallen significantly. This is because there's worries about the German and European economy. They're starting to do quantitative easing over in Germany. They're worried about deflation. And so everyone's kind of hiding in the bond market. Now get this. The German government just issued 5-year bonds. They sold paper into the marketplace. And they actually sold it at a negative interest rate. So investors who bought it are guaranteed to lose a little bit of money over a 5-year period of time. Now who would do that? That just shows you how out of sorts the markets are today relative to interest rates. And the risk of a big interest rate move higher is extremely low. So this brings me to my first investing idea to talk to you about today. And I have discussed this issue before, but we now have a brand new exchange-traded fund from the State Street Group that is being managed by the double line bond managers out here on the West Coast, headed up by Jeffrey Gundlach. The new ETF ticker symbol is TOTL, total. That's the total return. They're famous for their total return bond fund that has some $50 billion in it. Now they have an exchange-traded fund. This ETF has only been available for 3 days. It's going to trade 1 million shares today in the 3rd day of it being available. Now this is a multi-sector fixed income exchange-traded fund, and its bias is towards mortgage-backed securities because that's where Double Line specializes. But this particular exchange-traded fund can buy emerging market corporate debt, it can buy high-yield bonds, it can buy treasuries. It gives the manager a lot of flexibility. The target yield on this ETF, and again, it hasn't been around long enough to have an indicated yield yet, but the target yield is a little over 3%. We'll call it 3.5%. But I believe that this is a very nice position in one's portfolio to generate some income without taking a lot of risk. So check out TOTL, the brand new exchange traded fund from the Double Line Group, sponsored by State Street. And again, 3 days of trading, 1 million shares. Pretty amazing. Last item I want to leave with you with today is I'm getting ready to write the next issue of Successful Investing. In this issue, I'm going to be focused on taxes. And I believe that one of the best tax strategies that an individual investor can be implementing for themselves is investing in the Roth IRA. So I know that you're getting ready to prepare your taxes. I'm actually working on my taxes this weekend. Tax season is here. And if you qualify, if you make less than $180,000 a year, a Roth IRA is a really smart choice for you. It's a type of investment account that gets you tax-free growth, and when it comes time for withdrawal, tax-free withdrawals as well. Roth IRA, super cool investment account for yourself, for your spouse. If you're working, you qualify for the Roth. So that's it for me today. Thanks so much for tuning in. Comments and questions are welcome. My email address, askdoug@dougfabian.com. Have a great week.